The Dubai real estate market has experienced an incredible boom in recent years. But right now, many investors are asking one key question. Should I sell my property before the market turns? Especially with the current geopolitical tensions around Iran, many investors are wondering whether capital could leave the region or whether Dubai might even benefit further. I currently get this question almost every day. That's why today we're going to take a very close look at where the market really stands, what risks the conflict brings, who should actually consider selling now, and whether this might be the right moment to take profits. Because the difference between a good and a perfect selling time can quickly amount to several 100,000 dirhams. Welcome, my name is Eugen Zimbelmann from Dubai Finance. I help investors successfully invest in real estate in Dubai by finding the right property as an investor, Dubai Land Department certified property valuer and mortgage specialist. Let's start with what is currently causing so much uncertainty. The DFM Real Estate Index. This index has dropped by around 30% since the end of February. On social media, these charts are being shared as supposed proof that the Dubai real estate market is collapsing. I have already dedicated a separate video to this topic. If you haven't seen it yet, you will find the link in the video description below. So here's the key takeaway. The DFM Real Estate Index is not a property price index itself. It measures the stock prices of a few listed real estate companies, most notable Emaar Properties, which alone makes up around 50% of the index. Stocks can be sold in seconds, real estate not. So let's take a look at the real data. In the week from the 2nd of the 9th of March alone, 3,570 real estate transactions were registered in Dubai, with a total value of 11.93 billion dirhams. Among them was a single apartment sold for 422 million dirhams, the third most expensive in Dubai's history. But here's a key detail many people don't know. These transactions are based on Form F contracts that were typically signed 30 to 60 days earlier. This registration at the trustee is only the final step, meaning price and conditions were agreed weeks before the conflict escalated. These numbers, therefore, do not reflect current buyer sentiment, but decisions made under completely different market conditions. What really matters are the Form F contracts from the last 2 weeks. We have direct access to these early stage transaction indicators, which represent binding initial agreements in Dubai. These are strong leading indicators as buyers are required to place a security deposit of 10% of the purchase price. And when we analyze these data, we see no significant deviations compared to previous transactions. Apart from a few outliers, prices remain stable. Though we do see a slight decline in volume, which is understandable given the current situation. Now let's move to a point that receives far too little attention in public discussions, but is actually critical for many investors. Off-plan properties in locations such JVC, JVT or Ajan were already under structural pressure before the first geopolitical headlines appeared. The current situation did not create a new problem, it accelerated an existing one. The numbers are clear. In JVC alone, more than 17,000 new units are expected to be handed over in this year 2026. Nearly doubling the existing supply. Another 10,000 units will follow 2027. At the same time, the absorption rate, meaning the number of units actually rented or sold per year, is only around 11,800 units. The result is inevitable. Supply exceeds demand. A landlord's market becomes a tenant's market. Rents decline and purchase prices follow. In these areas, we already see highly motivated sellers willing to sell significantly below their own purchase price. Investors who bought off-plan properties in these locations with the goal of reselling before completion often have not been able to achieve that. The market for speculative resales in these areas and in many others has largely stopped functioning. And for investors who are struggling to keep up with payment plans to developers, action is required. In extreme cases, continued payment defaults can lead to a total loss. Sometimes, especially with off-plan properties, it is the smarter decision to accept a calculated loss now rather than risk losing the entire investment. Another group directly affected by the current situations are short-term rental investors. Due to airspace restrictions and travel warnings, tourism demand has dropped almost to zero overnight. Hotels on Palm Jumeirah are reporting occupancy rates below 20%. Airbnb apartments remain empty. The obvious question is, does it make sense to switch to long-term rental? The honest answer? It depends on the location. The transition works well in areas with strong and stable expat demand, where people live and work long-term. Business Bay, JLT, Dubai Marina, Downtown, and a few others. Buildings with good infrastructure, fitness facilities, and professional management remain attractive for long-term tenants. It becomes significantly more difficult in locations designed primarily for tourism, such as certain buildings in JBR or tourist-heavy areas of the Palm. These areas lack stable long-term demand. If you are in short-term rental there, you should evaluate whether selling mid-term may be the better option. In general, long-term rental yields are often not significantly lower than short-term rentals. In some buildings, they are even higher, but the risk profile is fundamentally different. The current situation makes that very clear. And if you want to receive these kinds of market insights regularly and truly understand what is happening in the Dubai real estate market, subscribe to my channel Dubai Finance. We look beyond the headlines, analyze real transaction data, and provide clarity investors actually need. Now let's come to the most important group. And it is larger than social media suggests. Investors who own properties in established locations and the right buildings. Downtown, Marina, Business Bay, Dubai Hills, Creek Harbor and similar areas with well-performing rental properties and no immediate liquidity pressure. For this group, there is currently no rational reason to sell. The people who live and work in Dubai, families, entrepreneurs, expats, specialists, still need housing. They do not cancel their leasings because of geopolitical tensions. Anyone who signed a yearly rental contract at the beginning of the year continues to pay rent, regardless of what happened in the last few weeks. There is also another effect. Residents who were considering buying may now wait and delay their purchase decision. This strengthens rental demand even further in these locations. From a historical perspective, Dubai has gone through multiple crises. The Iraq War in 2003, the global financial crisis in 2008, the COVID-19 pandemic in 2020, followed by price increases for over 60% until early 2026. Despite the Ukraine war, global inflation and regional instability. Investors who sold in panic during these times lost. Those who stayed analytical had a clear long-term advantage. This does not mean the same will happen again, but it does show that decisions driven by fear are rarely the best ones. Now you know who should consider selling and who should not. But this decision is always personal. It depends on your specific property, your location, your financing structure, and your individual situation. And this is where the difference between a good and an optimal decision becomes significant. For a property worth 2 million dirhams, a mispriced sale or the wrong rental strategy can easily result in a difference of 150,000 to 200,000 dirhams. That is exactly where we support investors at Dubai Finance. First, as a Dubai Land Department certified property valuer, I determine the exact market value of your property, not as an estimate, but as a reliable foundation for your decision. Second, if you want to sell, we don't follow a standard process. We identify the best achievable price and structure the sale to maximize your outcome. Third, whether short-term or long-term rental, we analyze which model delivers better returns with lower risk for your specific property and location, and implement it operationally. Fourth, for investors with multiple properties, we manage both the strategic and the operational side of the portfolio, from market monitoring to tenant management. The initial consultation is free, not commission-driven, not with the goal of selling you anything, but with the sole purpose of helping you make the right decision. Visit now www.dubai-finance.com. Choose a time in the calendar and let's analyze together what makes the most sense for your situation. I look forward to speaking with you.